Alrighty, let's go through some trade examples and I'm going to separate these out in terms of phases. So let's look at phase A first. So of course, phase A is when we are trading pro swing and pro internal, right? We have that full alignment. So on this diagram, this would be a phase A trade and this would be a phase A trade if we are taking shorts, because after this bearish IBOS, the internal structure is bearish. The swing structure is obviously bearish. So we have full alignment. These are the types of high probable trades you want to trade with phase A. So here's an example where we have bearish 4-hour swing structure. Okay, we've got that 4-hour break of the low. Price then traded up and it did break the 4-hour swing high. However, we can see that it was just a wick break. It failed to close above the high with a candle body close. Therefore, it is not a bullish break of structure. And then since then, you can see that price has just started to make its way down. So ultimately, this is still a weak 4-hour swing low because it's failed to do its job. It's failed to cause a candle body break of the high. So ultimately now we can look for price to target this low. Okay, so with the 4-hour, we have that bearish bias with some nice equal lows building to target. If we now jump down to the M15, so this is going to be our medium time frame. So this is our main time frame for building our directional bias for the session, and then identifying the medium time frame POI in which we're going to trade that directional bias. Okay, medium time frame ideas, medium time frame POIs, lower time frame execution. So as we can see here as well, the M15 swing structure is aligned bearish with the 4-hour swing structure, as we've got that last break of structure here to the downside. Now, price did pull up to this M15 POI here. This was around the Asia session time, you see 2:30 GMT, and then had a bit of a corrective move down and an M15 chock. But we can see that, like, you know, the internal structure is still clearly bullish. So when you get your desk, say around Frankfurt Open before the London session, yes, we've had a bearish chock, but you can see price action is kind of quite corrective. And there isn't any real super clear and mitigated POI at this point when price is pulling back. It's all kind of being mitigated. So it's not too surprising then, with all of that buy side liquidity building up, that we see this impulsive move to the upside, okay? Giving us another bullish internal break of structure of this high. Okay, so hopefully you can see now that if we were to take a short from this POI, it would be pro M15 swing, but it would be counter M15 internal. So that's actually phase B. I know this lesson's gonna be on phase A, but this would be phase B. Okay, now if you're ever going to trade phase B, the best time to do it is kind of like this, whereby you are entering on the unmitigated extreme POI. Why? Because this is the area in which we expect the swing pullback to end. Okay, so if you're going to trade short here, which is against the bullish internal trend, we want to do it when we're expecting the internal structure to reverse. And we expect it to reverse when we think the overall swing pullback is finished. And because if we look left, this is literally the last unmitigated M15 supply zone within this leg, within this range. That's why it makes sense if you want to trade phase B, these are the sorts of times to do it, right? Because you're expecting the internal to reverse, but of course there's no guarantees. So if you are going to take a phase B short, ideally you can get in here before price pulls back down, you know, into like demand at the strong low, because then of course price could push higher, okay? So that would be phase B. Now, technically if you wanted to trade this, right, before I even jump down to the lower time frame, you can see there's clear M15 lid here, so we know obviously it's going to be valid on the M5 as well. And this could be a potential entry for you, right? There is lower time frame lid to the left. It's visible in the M15, which makes it, you know, higher probability. It's more significant if you can see it on a higher time frame. Time is power. We have the POI mitigation. We have the liquidation of the lid to the left. Okay, so technically this could be an entry, right? And you could size it up like that. Now, these ones are kind of tricky to, to categorize with probabilities. I would say it's kind of on the lower end of medium probability for me. One, because it's phase B is trickier, like I keep saying, because you're trading against the internal trend. But two, this is quite a big swing range. Okay, this is quite far away to the left. So as I was saying before in the theory lesson, we don't want to be using lid all the way here to the left and then entering short on a liquidation of this lid. We want it to be very, very near, ideally. Like if we were getting short here, you see how lid is like right beside it. So it's like a tiny little internal range. These are my favorite ways to use LC1. using structure all the way to the left like this and then trying to short it here, right, when we liquidate that lid into here, much, much, much trickier to do. So, I haven't even really looked out to take these sorts of trades really in the back test of, to be honest. I'm focusing more on the immediate price action, but I did just want to go over that in case anyone was looking at this. Perhaps that's something you want to test and you wanted to implement, but my recommendation would be that you focus on what I'm describing, which is the more immediate price action to the right, unless the swing range is a lot tighter. So this is kind of where I'd classify this as old price action to the left. Obviously, there's a bit of discretion with that. So it's a nice trade if you took this one, if you wanted to enter on this, but it's the type of trade I would personally say stay away from. At least until you gain more experience. It's not the type of trade I'm personally going to be looking at least at the time of recording. It would be too far away from me, okay? But this ends up being a winning trade. I won't draw it all out for the interest of time. Now, what I'm going to show you is phase A, where things become a lot higher probability, because if we're just a little bit patient, because at this moment, right, what could happen is this is a strong internal low, right? So although we've had a mitigation of the extreme level of supply, and we know this is a decent area in which the swing pullback can finish, and we can get that next move, we obviously don't have confirmation of that until we get the bearish IBOS, because there is every possibility that this could hold and we could push up higher, right? The market can do whatever it wants. So trying to short against this is possible. It makes sense to do it here because it's the last unmitigated level, as I keep saying, but it's only when we get this that now you have, okay, a lot more confluence going for shorts, right? So we get that bearish IBOS. So now both the swing and internal are aligned bearish. Happy days for shorts. A few other nice little pieces of confluence. Like I said, obviously we sweep some lid here to the left into that extreme POI mitigation. We also got with this M15 shock here, use this here, that then turns this bullish IBOS also into a strong liquidation, okay? So yes, it is a valid bullish IBOS, but it can also be a strong liquidation at the same time, right? This is a high that broke some structure, price then comes up, liquidates the liquidity behind that high, it's the Asian session high as well, and then we get the bearish IBOS. Okay, so let me keep it nice and simple for you. The 4-hour structure is bearish, the M15 swing structure is bearish. We pull back up to pretty much the highest probable POI in this swing range that needs to hold if we are to remain bearish. We've liquidated some lid to the left. We've had a strong liquidation here with the immediate price action of the Asian session high, right? This is a high that broke a low. Prices come up and liquidated those orders. Nice big V-shaped reaction, showing that it's likely, the big guys are using the buy-side liquidity behind that high in order to fill their short positions, okay? And then in the most simple and powerful confluence we have a bearish internal break of structure. So even if you don't really fully get all of the liquidations and everything and whatever, very simply, our internal structure has now shifted bearish. This is our strong high. We now expect these bearish internal ranges to hold until the weak low goes, right? It's pretty much the first thing you learn in a technical analysis module. Okay, so we know our directional bias, we want to get short. So then step 2 is identifying your medium time frame POI in order to play that directional idea. So our directional idea is bearish. Let's look for a supply zone. Well, we've got the extreme supply zone here, but what can we see? It's pretty much kind of already